Good evening, and Ashish, a very warm welcome to you to this fantastic location, the Gift City, as Ayush rightly said. Business Today actually is very, very proud to be here at Gift City at a time when the Indian economy, the Indian financial markets are really, really booming. And India is in actually the toast of the global ecosystem. In that sense, we've had the G20 last year. You all know what happened at the G20, the way India was celebrated and the way it was conducted. And now Gift City is a place which holds the promise of bringing global finance into India. That indeed is the subject of our discussion today, Ashish. No better person than Ashish Chauhan, MD and CEO of the country's largest stock exchange, one of the world's largest now, and the world's largest by trading transactions on in the FNO, and really an important financial institution which is also very active in Gift City. So I'll start off, Ashish, by asking you. You know, there was a time, we go back a long way, there was a time when we used to discuss Indian markets being exported. You know, that was, in fact, the regulator also, I remember, used to be concerned that there was this whole idea of the Indian financial markets going overseas. How do we bring it back here? And today, the Indian markets are actually one of the most vibrant in the whole world. And we are talking about Gift City becoming an integral part of bringing the global financial system to India. Tell us your initial thoughts and what do you see as Gift City and how it sort of holds the hope for the future.
Good afternoon and thank you, Saurav. Gift City is a very unique concept in its own way, but it's also in some ways very similar to other concepts. So broadly speaking, the way I look at it is how Hong Kong supported China's growth from 1979 onwards till literally this year, so almost 43 years, by raising funds from outsiders for China's growth in terms of its industrialization, its infrastructure development, and so on and so forth. The Gift City can play the same role in terms of raising funds for next 30, 40 years for India's growth, and of course for its infrastructure development, for its sustainable development, for the municipalities, for the state governments, for the central government, and of course for its corporate. So that's broadly the framework. On top of that, there is a layer of providing skilled services to the rest of the world. The way India ended up providing the IT services and BPO services to the rest of the world, and India has become pretty much a capital of services in the world. It can literally, using the Gift City as a place, provide financial services to the rest of the world, where a lot of Indians are now becoming highly educated, very numerically in terms of people of Indian origin usually have a good grasp over arithmetic, and those are the kind of skills which can, sitting here by having lower costs of manpower, we can provide similar service to the rest of the world. And of course there is a layer of IT which can also be used to leverage the services on both sides. On top of that, providing the transaction processing for Indian assets as well as the world assets. For me, Gift City, I have been associated from 2013 onwards, and we run the largest exchange here. So for me, we do provide transactions in Gift Nifty, which used to be known as SGX Nifty earlier, and today we trade 22 hours a day from here. We start trading at around 4:30 in the morning, and next day 2 o'clock we close it. So effectively before Japan starts, we start trading here, and after California sleeps, we sleep. So effectively we cover the entire world. So not only the Indian origin companies can list here, or Indian bonds can list here, which almost $80–85 billion of bonds are already listed without none of us knowing. But companies which are not of Indian origin, which are being invested from say Gulf or US, can also start trading here because it is now becoming very difficult in terms of the cost and the compliances to list in Western countries and also to remain listed. Whereas this is a highly regulated jurisdiction in GIFT City, and still it's extreme low cost jurisdiction which is available literally 24/7. So whatever number of hours you can trade in US or Europe or Japan, you can trade here, but at a fraction of the cost of listing annually and fraction of the cost of trading. So that's where I think we are going to provide in GIFT City complete end-to-end services to whoever wants to have manpower or transaction processing. Just to give you a perspective, we started trading in the GIFT Nifty around last July, and now on a good day we would trade around $25 billion of Nifty trade alone, and an open interest is now sometimes around $13-15 billion. So that's the kind of sort of volumes that have already been built.
Where do you see these volumes going? I mean, I know you are you're an exchange. You don't want to predict where it will go, but given the fact that it's already a good beginning and it's just August, like you said, and we are just in March now. Where do you see this GIFT Nifty initiative moving? And the second point which I wanted to ask is, Indian companies using GIFT City to access finance is one part of it. What about global companies, like you said? How soon do you see that happening now that the first few really booster doses of GIFT City have been made?
In a way, it's still in early stage. The basic products are available, but we also want to go with index futures and index options for even corporate bonds, corporate bond index futures, corporate bond index options, so that when the yield curve is prepared or any Indian bonds go into the global bond indexes, we have actually a base on which you can trade on in a free sort of flowing market. Broadly, they would trade otherwise on a over-the-counter market. Here, you would be doing trading on exchange markets. And so, similarly, foreign currency trading today, of course, US dollar, Indian rupees trade here. We want to go into more pairs and as many products as possible, including electricity or carbon trading and so on and so forth. So we want to kind of expand the products that are available, and that would also help the Indian companies which are creating carbon credits to also come here and sort of transact with the rest of the world of the carbon credit they produce and so on and so forth. So we have hopes that somewhere all these markets will also start trading at GIFT City going forward. And it's still early days, but the regulations are being really built quickly. Institutions that are required.
Also tax breaks.
No, tax breaks were always there, but the institutions that need to be there, from NBFCs to banks to AIFs to mutual funds, everyone is now coming in here. And so once that base of institutions is built, then the instruments that they require to trade on will basically are being demanded. Some of the new announcements which Honorable Finance Minister had made about providing overseas derivatives instruments here, and similarly direct listing of companies of Indian origin here, as well as, of course, as you rightly said, when the non-Indian company will get listed. And so those are the documents, or those are the policies being just now made or being announced as we talk.
This direct listing is another very important part which can really make a difference to Indian corporates, and GIFT City can really play a big part in that. Do you see, that also giving a boost to the startup ecosystem which is growing? And, when do you really see that taking real good big shape in GIFT City?
The startup ecosystem, like just now, I think there is a conference going on in Delhi for the sort of startup sector. And so there will be sector of the startup ecosystem which will get better valuation in Indian sort of domestic market. And you can see many of those companies are currently flipping into India back from wherever they had gone. So there will be at a point in time some sectors which will get better rating or better valuation in domestic market, or they've reached a stage where they can see the profit, because Indian domestic market is not that patience for long term and not even risk taking, especially for young companies. So they would want to go for profit making companies or companies which can make profit really soon, or the sectors which are really profitable. But other companies which are like very long shots, but internationally they get good valuation, many of them will want to list through the gift cities. That is the way we are trying to work on, seeing some of those promoters who have structured their companies abroad but have businesses in India which are profitable, they may want to list here, and so on and so forth.
So reverse flipping in that sense,
Yes.
coming back to India and trading. The other point you rightly mentioned, Ashish, is about green financing, carbon credits, and in the entire green ecosystem being financed out of Gift City. We are also seeing, leasing, ship leasing, and all of that, those kind of activities. In fact, Business Today did a cover story recently on how Gift City is progressing, and in that we found a lot of other, even larger accounting firms, etc. So, are you really seeing the major green shoots of this whole ecosystem being built now?
Absolutely. Even today, $85 billion of bonds that have got listed, probably $25 billion odd can be categorized as the green bonds.
Right.
And many more will come, but it's still, in a way, the entire ecosystem of the carbon trading and other things, once that gets built and more institutions have set up their shops here or their representative offices, you will see the numbers kind of going up too fast because of the way the tax structure here vis-a-vis even, say, Dubai has now 9% tax, whereas here for 10 years out of 15 years, and you can select which 10 years you want, there is no tax, right? And so there are many, many benefits here, which many people are taking advantage. I have participated in conferences where now many of these fund managers tell that the Gift City, IFSC, part of Gift City is now much more favorable for investment into India, but also even in general.
You mentioned regulation also as an important piece of this Gift City initiative, and indeed of financial markets. You are a quasi-regulator in that sense. What are the key elements of regulation you think an organization or an entity like the Gift City needs to add to the already existing and robust layer of regulation which we have in India, in the markets?
Sometimes one wonders that we have too robust regulations. And so,
I'll come to that.
right, so this being a special economic zone, it's where you want rest of the world to come, and this zone is going to compete with Dubai or Singapore or Hong Kong or London, and not with the domestic regulators or domestic regulations in a way. So broadly speaking, if we can benchmark against the regulations or lack of it, or flexibilities that are available in terms of the players who can come into this place, their tax treatments, the way they need to register, from there onwards to even setting up companies. If it takes one day there, in how many minutes you can kind of structure a company here. Those are the kind of things we need to benchmark against Hong Kong or Singapore or Dubai or London. And that's where I would say we are still sort of very far in terms of benchmarking abilities for speed or execution or lack of hassles that people need to basically have. Of course, tax breaks are brilliant because now Singapore also has a reasonably large tax. Dubai also has large tax. Hong Kong is pretty much now China only. So what remains as a IFSC, special economic zone in a finance sense, is now only the Gift City in this part of, literally from Japan to Europe. Even within Europe now, there are very few places which have similar tax breaks today.
Talking of regulation, also continuing to be on that topic, Ashish, there was this whole discussion of late on whether small caps and mid caps are overheated. The regulator, the chairperson made some comments. I also must add that not everybody agreed with that view. including Uday Kotak, including even some people in the government. I don't think there was complete agreement on her views that there is overheating in some sectors. What is your sense of where the markets are right now, as because we are in a critical stage of the market and it's grown to tremendous proportions. What is your sense of this overheating debate? Where do you stand on it?
So now we have moved from the IFSC to the domestic area.
It's always good. Ultimately, we are in India.
Basically for me, the way I look at it is that the regulators of any sector have the maximum amount of information. And so their views have to be taken very seriously by everyone, saying that they make those regulations and then they see the outcome, and also in a micro basis, given the way the data gets collected today at every level. So I would respect the broad perspective which the regulator says. At the same time, India has come a long way in terms of the stability of policies, the growth prospects it represents, and continual growth that is there. Like last quarter itself, you were growing at 8.4%, which was even not in the wildest imagination of the best and the brightest, or I wouldn't say best and brightest because they tend to bring you down, but at least the most optimistic economists were talking about 6.5%, 7% growth rate, and you are suddenly coming out with 8.4%. That tells you that there is a tremendous amount of growth momentum that is building up, and if the results of the elections come to what the markets expect, you will see even further growth going forward in infrastructure building, in terms of industrial activities. The PLI framework that has come in, including setting up of chip plants to EV plants to yesterday only I was reading, in fact today morning, yesterday, lithium mine started somewhere in Jharkhand, and so we were hoping it will happen in Jammu because the largest lithium sort of thing came out in Jammu, but instead Jharkhand or probably Chhattisgarh started the lithium mine. So the amount of action is phenomenal. It will take off. The background has been built. Probably next 5-10 years are for India to actually grow much faster than what it has done over the last 15-20 years.
But there were pockets of concern in the economy also, Ashish, because even today, even while there is talk of some froth in the system, some small cap, mid caps, etc., being overheated, there is also the real problem of the MSME sector being under stress. Even today, I mean, after the tremendous in COVID, they are still struggling to come back to what they used to be, and they are one third of the economy. So, where do you see that? Is that a contradiction in terms of, or do you think that is working well and they are coming back?
No, I have a different take on this. See, when there is a great churn that is happening, especially because of the way the technology is changing, the changes are going to be very rapid. Some sectors of the economy are going to grow much faster than what we can perceive today. And many of them may not have existed, those sectors may not have even existed 5 years back or 10 years back. So we are not even looking at them, and those sectors start growing so fast that we could not have imagined. And the sectors which are traditional may not be able to create that kind of wealth. Basically we need to keep in mind that China is going through some serious deflation in the real estate. They have issues even in their industrial capacity, which is way beyond what they can use. So they are actually pretty much dumping most of the products. So all industrial capacity in some ways are going to not be that profitable, even if you put dumping duty. One of the larger demands which I get today also from here, but also from other people I meet across over the last few weeks, is that the amount of dumping that is going to happen, or that's already started happening by China, and Europe, which is like, in a way, very free market types, at least when they talk to us, not to China, but even they are trying to put in dumping duty on Chinese EVs and other stuff. America is starting. How do we not do that on steel and other stuff? So that's where, for me, the industrial sector may grow in terms of the volumes, but may not have the profitability growth in some of the pockets. Whereas other areas which are growing, which currently are not in our radar, might grow faster. So aggregate, we might go very fast, but some sectors may look like that there is some sort of lack of growth, and some of them may end up doing so well that you wouldn't be able to imagine. But overall, if you continue to grow 7.5%, 8%, then pretty much we are, and for a longish period, we should be able to reach the targets that we want to reach.
Ashish, you lead, you've been BSE CEO, now you are NSE CEO, and technology is a critical aspect, not just for GIFT City also, but because technology is, bulwark on which NSE has been built. What is the next step, you think, for technology to make the markets even more efficient? Do you think, we are talking now about settlement periods even becoming smaller, instant settlements. Where do we stand on that now?
See, the markets have two sides to it. Most of the time, the glamorous part is what I call transaction processing. That every second things happen and you can buy, sell, make money or lose money, and then settle also. And so we are when we completed the movement to T+1, that is you trade today, settle tomorrow on a working day. T+1 was the fastest settlement in the world by any country on January 23, when we completed the full year of transition. Until after that, no other country has been able to move till March 24. America is talking about going live in May 24, but it remains to be talk because we have not seen any actual execution. And in America, unlike China, you can't hide much preparation. So I don't think by May 1 they will do any progress at all. But hopefully they should. But effectively, we have done tremendous strides, or we have taken tremendous strides in last 30 years in being the first automated markets in 1994 to till now, where we are now doing T+1, and from March 28, that is after a few days, we are going to start T+0 settlement. That's if you trade today, you will be able to settle today. And that's again the fastest, because even at T+1 we are like fast. And in few months' time, SEBI's plans are to go for real-time settlement. That's if you trade now, settlement in next few minutes or seconds and stuff like that. So that's like telling you that technologically the entire country's ecosystem, whether of banks, of depositories, of stockbrokers, of investors, exchanges, everyone is so geared up that they can actually settle on real time, which is like a scientific movie. Even say America probably would not be able to imagine for say next 50, 10 or 100 years to do such things, right? So that's why it shows your transaction processing prowess and also shows the soft infrastructure level that country has come into. But the second part, which I think is more important for markets, and we typically tend to ignore except when the allegations start coming, that is what I call corporate governance. Because what we allow on the transaction processing is that you want to buy a share, somebody wants to sell, and of course you buy shares, so you have to pay money. After the share comes in your account, whether next moment or after a day, the relationship is between you and the company. The company has to give you a lot of information, company has to do well, they need to share those profits as and when they are made. And so that corporate governance part, I think India's corporate governance story has been untold till now. We are pretty much amongst the top 5 markets in terms of the corporate governance, despite whatever allegations people make. And that's why, for me, we are like top of the line in terms of the corporate governance. All our shares, almost all traded shares on India are on pari passu basis. That is, every share is the same. That is not true in America. They have golden shares, they have class A, class B, all sorts of confusing things where the minority shareholders who are not the manager owners end up getting taken for a ride. Whereas in India, although they keep on accusing us because they are today. That's why we want to believe them, but their corporate governance is several notches below ours, and that is true with even Europe. And so I just want to tell you that one part of technology prowess, it's easy to prove because we are too good in technology, let me put it, as a country, not as a particular exchange or something. But what is more important for a corporate governance, what we finally manufacture as an ecosystem is trust. And trust, one portion is of course in transaction processing, getting the best price, getting your money faster and stuff. But the larger trust is in the entrepreneurs which you put it, people, the managers and governance. And that's where I think why India is now a $4.5 or $4.7 trillion market. There is an economic theory which says that poor countries do not have good markets of capital because poor people don't save. They don't have nothing to save, right? And on top of that, if they save, they don't put money even in their brother's business. How will they invest in somebody else's business 2,000 kilometers away? India has proved that theory completely wrong. A person sitting in Jorhat or Dibrugarh is investing money in a company in Salem, in Tamil Nadu, in textiles. She's never going to visit that place. But she's putting her hard-earned 1,000 rupees with a complete confidence and complete trust in Indian entrepreneurs and Indian system, including judiciary and everyone. And that's where for me, today, with a very low per capita income market, like $3,000, at $5,000 also there is no similar market, double the per capita income. At $10,000 there is no such market. At $20,000 there is one market which is called China. When the prices go down there, government has to go and buy. In our case, government comes and taxes me more, right? Otherwise, they don't participate, they don't come and save anything, and they shouldn't. Why I'm telling you this is a market which has come out of people's participation, interesting the entrepreneurs of this country, and this is a great revolution. I say India is becoming very truthful, very trustful nation, and that a large portion of that goes to our corporate governance and our entrepreneurs.
In fact, Uday Kotak told us recently that he sees India as becoming more and more a nation of investors from a nation of just savers. So I think that's great news for exchanges, for the stock markets, the capital markets, and for places like Gift City. Thank you very much, Ashish Chauhan, for sharing your thoughts with us this afternoon.
Thank you, sir.
Thank you. Thank you.